Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we're talking about one of our favorite subjects here at VCTV. You know it, you called it, blockchain. But we're going to go a level deeper. We're going to talk a little bit about FinTech, what's happening in the payments and banking sector. As we know, there's been some big fundraisers, there's been some acquisitions, and there's been a lot of new developments as well. We've got big retirement funds putting a lot of capital to work in the digital currency space, as we just talked about earlier today. We also have crypto banks on the rise with new funding and new infrastructure being put in place, and so much more. So what better place to talk about it and break it all down than here on VCTV? And that's what we're about to do. But before we do that, first, if you would like to be on a show like today's, reach out to the team and or myself, and we'll find that right spot for you, either as an investor or as an entrepreneur, to share your thoughts and insights and on-the-ground perspective of what's happening in all these different industries, technologies, and regions around the world. And also a big thank you to the LATOKEN team and to Maria, who make VCTV possible every single day. Also, make sure to check us out on Clubhouse today at noon Pacific, as we're going to be talking about everything that went on during this week. It was a wild week in the industry. We need to be breaking it down. So join us on Clubhouse later today in a couple hours, and we'll be doing so as we bring some individuals from around the world and the community to share their thoughts as well as insights on what's going on. With that, let's go ahead and jump right in. And I'd like to welcome one of the additional team members here at LATOKEN. Maximum, welcome. I know you've got some questions. I'm all yours. Tell us a little bit about what you do at LATOKEN, and then also let's get into it. I know you've got some questions that we'll talk about around the industry today.
Yep. Hi, Kyle. Hi, everyone. So my name is Maxime. Thank you for this. Having some questions to discussion today. So I'm just trying to answer this. So having some answers. So my first question will be regarding the how FinTech technologies will be impact on the payment process. So I know some cases like cloud computing, some boosting some process. So my question will be how in this stage, how in each cases it will be impact on payments process, how FinTech technologies will be.
Yeah, this is a great question. So, just to restate it, so how FinTech and payment processors will be impacted by things like cloud, and also I'll add in there, even decentralized or distributed computing. So when we look at the landscape of FinTech, and more so now over the last year and a half, we've seen a dramatic change, right? And if anything, a lean on more technology like cloud computing. We had, especially in the United States, we had a limited amount of, or a growing amount, I should say, of P2P, so peer-to-peer transactions happening. When COVID came in 2020, we really started to see this boom of P2P, peer-to-peer transactions starting to take place, along with contactless payments as well. Well, with all of that, you have to have the infrastructure in place, not only from the applications to handle that, but to process it and then to store the data and process that data. So we saw a huge lean on cloud services, AWS, Amazon Web Services, which stayed up and stayed very relevant during 2020. And then we also saw Microsoft Azure and also Google. So Google was kind of the dark horse in the entire kind of FinTech cloud computing, if you will, infrastructure, where Google started entering in more FinTech-based solutions with Google Pay and a few others, trying to do more with their cloud services. So you had the three cloud providers and also a few others that started to rise. And then what we started to see a shift towards at the end of the year of 2020 and moving into now 2021 is this rise of distributed computing and leaning on things like and still the promise of a company like Definity or even Amazon, Microsoft, Baidu, and Oracle, and a handful of others that have these cloud or decentralized services that are starting to become more useful. And that leads us into what we talked about earlier today is, things like decentralized identity, so DID, which is now becoming starting to become a requirement for future FinTech. We also have, two-factor authentication, along with some biometrics and facial readings as well. So it's a big, heavy lift. There's a ton of areas that it's being leaned on, but that's just a little bit. I'll just add as well, from the world of blockchain, the thing that we also saw was a lot more lenience around blockchain in general. So blockchain technology, and not just in DeFi applications, but you saw Visa, you saw MasterCard, followed by Discover, and then American Express and Union Pay and others all start to move into blockchain-based projects, and not just long-term strategies and talking, but actual projects, right? Visa has an accelerator program or a fast track program with more than 35 companies. MasterCard is doing the same thing and making huge multi-million-dollar bets in the space, also bringing in this technology, bringing in infrastructure to build into their customer base, both us as consumers and then as merchants as well. And now you have Discover, who is, I think, the third largest financial provider, who's looking to figure out what their strategy is. And Amex, American Express, who's just started making a few investments, trying to understand their bigger play as a whole of what they do. So I hope that answers a little bit of it.
Yep, thank you, Carl, for this comprehensive answer. It's really insightful for me and required for me to do my requirements. So also having some questions for clarifying to your side. So let's discuss about the future of payments, future trends of payments. Yep. So I know some like a biometric payments, like contactless payments, like a smart payments, smart cards. So, and I also want to clarify what will be the future trends of this now, and just you maybe share some hypotheses about it regarding some industries in which will be it also applied and implemented. Yep.
Yeah, so I think in terms of trends, I think you called it out pretty right as to what's going to happen, what is happening. So when you look on a global scale, when it came to the future of payments and using things like biometrics or contactless payments as well, a lot of that really began in Asia and took fold in Asia very prominently, moved into Europe, now is starting to take place in US as a forced function. So with things, again, like we saw in 2020, we saw way more contactless payments than we ever had before in the United States. And now we're starting to see, again, that as a standard in Latin America and in Africa as well. We're just very quickly, whether it's a thumbprint, whether it is facial recognition, whatever it may be, we're going to see contactless payments as just, again, a standard going forward. I don't see that changing. In terms of trends, you're going to see more peer-to-peer. So again, P2P, as we discussed. You'll see biometrics, whether it's Face ID, which seems to be the next. But then that world of decentralized identity, or DID, I think that's going to be the next big wave of that, where we'll have that identity that's locked onto a blockchain that's non-fungible, it's non-immutable, you can't mess with it in any way. It lives with us. We'll have different identities that will go from that in the physical to the digital world as well. So we'll have our identities that we live and breathe our digital economy with in our online lives, and then we'll have those identities that we may interact with in a physical world as well. But that's the big trend that's coming. It's already here. I talked earlier about Microsoft releasing their Ion service as well, so their decentralized identity service on the Bitcoin blockchain today. But they're actually doing a bigger project around all of Azure and their cloud services to release digital identity everywhere as well. So absolutely going to be a huge area of focus.
Thank you for this, and having some final question from my side. Sure. Previously I analyzed a lot of startups, fintech startups, that's reached a really success from CB Insights. Yep, and I understood that it's really like a not sprint way; it's like a marathon way. It's a way of just win-win strategies. And I want to just verify from your side what you think about what the key successful factors of from the start to the became successful of the fintech startups and how it impact on the banking industry.
Yeah, so I think if I understand the question correctly, so what are the risks or the critical factors of making a fintech company successful?
Yep.
Okay, so I've got a few, and then Greg, a kid who's just joined us as well, who's the founder of Global ID and also a major investor in the space, I'm sure can add a few more. So for me, if you're building in the fintech proper space, so financial technology, we're not talking about DeFi at the moment, but just financial technology. Some of my thinking around critical factors is, one, make sure there's a use case for what you're doing, that there's also not only a use case, but a customer set. Make sure that you have security upon security upon security. If I didn't iterate enough, upon security in place. There's also insurance plans as well. And again, that will lead into decentralized or DeFi in a minute. And that you've done partnerships. So if you're talking about traditional finance technology, fintech, that you've gone through and made sure there's an actual use case. You've also made sure that there's customers, you've got security in place, and you've also got partnerships. The next thing is easeability. Is this thing easy to use? Is it easy to interface with in some way, shape, or form? Now, that's that. Moving into the future of the world, critical pieces of success is make sure not only is security on point, but that you also have great investors or great people around you on the team, like Greg and others who we'll hear from, that know and have experience in the industry. This is one of those industries, financial technology or fintech, that it's good. It's very, very good and recommended to have people who have experience from traditional finance or historical finance to be involved on your team to give that added perspective of what's happened in the past to where you're going today. And then again, can't stress enough the onboard, offboard. So making sure that it's easy to use, but making sure that very easily people can onboard to your product or company and service, and also offboard. So when we look at decentralized finance, DeFi, that's still one of the biggest hangups. It's not necessarily user interface as much anymore as it is the onboarding and offboarding. So how can I purchase something with a credit card, for instance, and not know anything about cryptocurrency or digital currencies? And then how can I also get something back, again, without having to know that technology is there, but I know that it's safe, I know that it's secure, and I know that there's some kind of level of insurance as well. So those are just a few, I would say, and I'll turn it over to Greg. I know he's got a few, again, being an investor in this space. And Greg, just to reiterate the question, if you didn't hear it, is just what are those critical pieces of success for any fintech company in your eyes?
Yeah, so financial services is one of those areas where historically you've needed permission to innovate because you're connected to players in a regulated industry. And so the most interesting opportunities for me are places where you can do what's called what I call a passive integration. What's an example of a passive integration? For instance, if you need information from a user's bank account, can you get that by working with Plaid, who can then let you drill into Wells Fargo, and then you get that information? Maybe you combine it with information you got from another vendor, like say Onfido or Verif, to verify a government ID, and you combine the Wells Fargo data with the Verif data, and you create a new credential. And maybe with that credential, that person can go out and open a digital wallet or get a loan or do something. And so somewhere in all this, the question is, did you ask permission? The most interesting financial service innovations I see are right on that gray area of maybe you should have asked, maybe you didn't need to, and maybe you can get forgiveness, but you need to know the difference between you really should have asked and now you're actually breaking the regulation versus like, well, it was this area and it wasn't really clear yet, and oh my gosh, there's all of a sudden there's a use for that. Like people will like use that credential to do something like cash a check because at a bank that you don't belong to because the credential's strong enough because it's cryptographically signed. Now, the question is that legal? How do regulators feel about it? And oftentimes it's something that is going to be something they hadn't really imagined, and it's not actually covered. An example was like when we wanted to start Square, there was this question of, there was this rule that said if the payment is under $15, you don't have to print a paper receipt, which meant even if somebody asked for a paper receipt, you didn't have to give it to them. By law, you could say, no, it's under $15. I don't have to give you a paper receipt. And yet for a long time, we thought, or we're worried, well, what are we going to do for all those transactions that are over $15? We're trying to process a payment on a phone and a phone doesn't have a printer. And then someone said, it doesn't say you have to give a paper receipt if it's over $15. And we're like, oh, that's right. It just says that, even if someone demands one under 15 by law, you don't have to give it to them. And so we're like, oh, I guess we don't need to do paper receipts. And then away we were to the races. But you have to have that, you could say that was kind of a ballsy move, or it was just like, so it's that willingness to kind of be in that gray zone and yet not so far out that guys with guns and badges are going to knock on the door and cuff you, right? So that is the magic that we're looking for, is people that can figure out how to work in the gray area to bring light to a problem or a sector that so far has been just, just really straitjacketed. And that's the fun part of it for me too, is finding ways to innovate without having to ask permission in a regulated industry. And so we're always looking for companies that have a bit of that magic and DNA in them. And so, yes, you do need people that can tell you like, no, that will get you in trouble. And that other thing is that just people say no because they imagine that's the law. Yeah. But like an example is, can you open a bank account in the US for someone who doesn't have a social security number? And the answer is yes. There's no law that says, because like, what if you're like from France? They don't have social security numbers. And is there some law that says French people can't have bank accounts? Well, no. But if you build software that has like a slot, and if you can't get by it without a tax ID from the US, well, then you just excluded all non-Americans from your product or service. And some people think, well, you got to do that because, but again, that's that area where people fill in and they fill in wrongly. And so that's the key thing for me for finding fintechs that really have something that might have legs is people that are willing to like innovate in the gray without basically trying to do an end run around the regulations.
I'm with you. I mean, I want to see people just sitting in that gray area, but also pushing the bounds in industries that haven't traditionally been thought of around fintech, right? I mean, you've got the entire mobility sector that is ripe for integration. I won't say disruption, integration with fintech, right? We talked a little bit about what was happening with Fiat and Volkswagen. So Fiat is going to be rewarding sustainable drivers, or good behavior of drivers driving their new electric vehicles, giving them something back that they can go and spend and use within a marketplace. We have Volkswagen that's going to be doing something similar with energy and giving energy back to the grid on the global scale, and then giving drivers rewards back for that, again, that they can go and use, financial rewards. We also have the idea, and I say idea because there's a lot of companies still working on it. We haven't seen one lead yet, is integrating payments just in general into your car, so that when you drive a vehicle, yours or shared, payments are taken care of. When you pull up to a gas station, or as Tolga from Looped and I spoke about yesterday, you pull up to an EV station, you plug in, you pump up, and you don't actually have to get any kind of payment out. It's transacted due thanks to something like NFC, just being close, right, near near field. And then so payment or mobility is one, and I'll bucket as the future of work, and that sometimes gets a little messy as well, because the future of work encompasses so much. But look at a company like Zap and what they've done with so publicly, I'll add as well, with Visa and their application Strike, and being able to do real-time instant payments. That's something we've only talked about over the last 18 months. That, Greg is going to get paid, by the minute versus by the day. That's actually something we can do. So now, as a writer, you can get paid literally by the word as you're typing. Is an extreme case, but nonetheless, that's something you can do. Or that every day you're getting $40 versus waiting till the end of the week to get $200. So there's all those types of things that I think, when it comes to the future of FinTech, these are areas that have been traditionally set in their ways, looking for integration of new technologies that make it easier as well for people. I mean, Greg, I don't know if you're seeing that. For me, that's what's getting me excited, being able to do that. And then the boring, non-exciting stuff like enterprise, being able to handle suppliers and invoicing and just the entire world of the supply chain without anyone having to touch anything. It's all just handled through smart contracts. Everybody is getting invoiced. Insurance is getting notified. Everything is getting handled without anybody actually having to touch anything.
No, it's the exciting. It's the flattening. I mean, the word third rail often means something bad, but to me, there's the first rail is banks, the second rail are the card networks, but the third rail are ledgers that are going to allow on-us transactions. So as long as you can identify the seeker and the provider, the payor and the payee at the point of sale or at the point of service, then it's like, hey, if you have a wallet and I have a wallet, I think we're done, right? And we don't even have to talk about money. Like that could all, like in an Uber kind of way, the rates, all that's just taken care of. But instead of just doing that in one narrow vertical, like just for an Uber, like that capability ought to just be generally available. And so this is really why we're excited about what we call global ID. We spell it with a little g. I'm not trying to plug global ID here. It's just the concept that everybody should have an ID. And with that ID, everybody should have messaging and money. And like just messaging and money, I'm like, dude, if you have messaging and money, everything else is a subset of messaging and money. Those are just like mini apps built on top of those two fundamental capabilities. So as long as I know the money is going to you and not you, then we all have a seat at the table. And so that ability to clear those transactions in real time and potentially across any currency. So it shouldn't really matter that you got rupees and I've got pesos. Shouldn't matter, right? Because there's going to be some market maker that's willing to be taking rupees here and pay out pesos there. And again, you don't need a third trusted party institution to do that. That smart contracts can make that all just happen. It's an amazing flattening. We see a future where like monetization of content used to happen because you would sell exclusive rights to Netflix, and you could only see the sporting event or movie because and you had to go to that place because such and such tied it up. But now, why not have the creators retain those rights and embed them into the content itself? And then it doesn't matter whether you find it at Oprah's Instagram site. Oprah's plugging the movie, you click on the link, you watch the movie, some portion goes to the creator, some portion maybe even go to the actors, like everybody gets their piece, and it didn't have to route through Amazon or Netflix. That's the big disruption that's coming, because it means that the action in the casino is at the table, not walking between the window, which is like the bank or the card companies, and the table. Yes, like in today's world, you have to go get your chips, but nobody's sitting there watching you walk between the window. I mean, you got to do it, but that's not where the game is. We want to have the entire action in the casino be at the game. You never cash your chips in. Time to buy your meal at the end of the day or your hotel room, use the poker chips, right? That's what these new schemes are. And I'm just having a ball being in the casino.
Same. And it's in perpetuity too, right? So you can create a piece of media or content and it can be shared and passed around, and continually the creator is rewarded for that.
Is in the loop.
Exactly. Versus today, it is not that way. You look at something like Spotify, and sorry to call out, but it's true. I mean, you look at something like streaming services and the amount of times that an artist has to be played, for instance, to get $1, or you look at the pieces of content that anyone out here listening or on the panel generate and what we do or don't get for it. And you've got now companies saying like, wait a second, and both sides, companies and creators saying, well, wait a second, there's a value here and someone's willing to pay for it. And we've got some intermediaries right now, like Substack for newsletters and content, who are helping to bridge, mind you, this is not a bad thing. They're helping to bridge that next gap.
Yep. Substack, OnlyFans, that's the new, yep.
Yeah, which is leading us into, I mean, you look at a company like Mirror, I'm sure you know this company too, Greg, where you can now write an essay, tokenize it, and sell it for $1 or for $2, and someone can pay for that.
Right.
Awesome. Rock and roll. And the one thing I'll add, the thing that worries me about the future of FinTech that I think is going to be an issue, and Greg, though, did point it well, is that when you have messaging and you have wallet involved, all is good. And WeChat showed and proved that. You know, it's what happened or tried to happen with WhatsApp. We're still not seeing that yet. You know, the idea of Libra was supposed to bring that to us, but still TBD. You know, WeChat is still the best proven case of that, all encompassing. The thing that I worry about with FinTech that needs to be solved is the many wallets problem. And I don't want, you know, 17 wallets. And I don't necessarily want one to rule them all for the potential issue there, but we need some structure. So to startups out there, someone come to us with some structure.
Well, in India, they've got a pretty good model for that. So in India, you might have a Paytm wallet. There might be a different wallet that's held by the merchant that you're at, but the India stack sets a protocol. So it doesn't matter what wallet you're using. Even if the merchant's using a different wallet, it's all interoperable. And so we need to see more of that. So essentially your wallet really just becomes a browser onto your money. We unfortunately got started in the US with the concept of like PayPal. Like PayPal doesn't want your PayPal balance to show up in any other wallet but the PayPal wallet. And so when you tie the form of value to the brand of the wallet, then everybody's imprisoned in a silo and it's not interoperable. Just like Telegram doesn't talk to WhatsApp, doesn't talk to WeChat. It's kind of crazy, you know, email's interoperable, but we went to this world. There was a time when there was a protocol that could have made, it was called Jabber, could have made instant message interoperable, but the folks have worked hard now to trap people in their silos. And so messages and money have been notoriously stuck inside their silos. But we, you know, the party's not over. We're going to start to see like things like NFTs are going to beg to be discovered no matter which wallet they're sitting in. If I want best execution, I'm looking for a Picasso or I'm looking for that rare Ferrari. I want it to find all of those. And I don't want to be told that once I find it that like, dude, you don't have the right wallet, so you can't buy it. Nobody, when I go shopping, they look at me and says, oh, you don't have a Gucci wallet, so I'm not going to let you buy this diamond necklace. Like nobody cares what wallet you pull your money out of. It's your money. You put it in any goddamn wallet you want, right? So that it would be so obvious if some alien came to the planet, they'd be like scratching their head of like, why does it matter what wallet your money? It's just money, right? Like, or why would some money only work in certain wallets? That's crazy. And so I do think there's a potential that we'll get through it. It is true that, you know, Mark Zuckerberg with Libra, they kind of wanted to kind of break those walls down, and people blocked them, not because they didn't think it would work. They blocked them because they were afraid it would work. And they didn't want like Facebook to be like the one that did it. And so, and look, the SEC wasn't happy when Telegram was pretty far along too. They have a messaging system. They had Graham. They weren't really that excited about identity. So that was going to be a little bit of a compliance issue. And of course, China has figured it out, but it only works in China where, you know, they don't really give two hoots about encryption and or privacy. And so each of those parties had enough users and money, but they each had a sort of a fatal flaw that stopped them from taking it to the next level. And none of them were particularly interested in interoperability. And so, that game is still open, and obviously we're looking to throw our ring in the hat, but we don't think any big company is going to win because all the other companies will like pull out the daggers, and we don't think any particular country can drive it either because once again the other countries will pull out of the daggers. It's going to need to be what like internet protocols. It's going to be what we call it a weak protocol standard, where something comes along that looks so weak and unthreatening that everybody says, well, we'll use that. It's not like they're going to like be the big bully in the playground. But we're still just at the start of that. But things like NFTs and whatnot, that drives it because there's this huge new asset class out there that wants to be interoperable because it maximizes the value of the asset. And so it begs to be usable across every wallet, sendable across every messaging platform, and anything that gets in the way of that is friction. Okay. Mm-hmm. And so, even if you're as big as Facebook or WeChat, if your NFT only lives in their world, it's suboptimal. And so it begs to be free.
It does, and that's we're seeing that, as you mentioned, more and more with the NFT market, and it's not going to slow down because it's going to lead into the tokenization of everything. NFT, non-fungible tokens, means that something cannot be messed with. It cannot be adjusted for. And so we've already started seeing different trials of this, and it's just going to continue. And everything once physical will become digital and have a token to it. And maybe there's a dual representation, right? The digital twin of our future, but also, again, you're just going to have this digital world that truly we're moving into. And people may say that sounds crazy. It's not. Think about how much time we spend online. We have a digital economy separate from our physical economy that also merges the two. It's there. Look at Amazon, and you go into an Amazon Go store, that's physical. But guess what? It uses your Amazon account, which lives in the digital. So therefore, it's combining the two. And you can then shop on Amazon. Therefore, you've got the blend. And one other thing I wanted to mention too, to Greg's previous point, is JP Morgan. Big behemoth by all means, but their latest project that they have through the Onyx division, Link, the Bank of India and several other banks are working together to try to create some kind of interoperable, experience or remittance between all of these different countries and also wallets, and bring interoperability between them. Now, whether that works or not, I'm not going to speculate. I think we all have our opinions on it, but it is showing that a big bank who has been forward in the industry around blockchain is stepping up and helping to provide some tools that may or may not work for, we're talking, I think there are over 100, 150 institution banks that are working with them around the country. They're not going to necessarily be the winner per se. To Greg's point, I think there is someone that's going to be the dark horse to come in, but I just wanted to add that out there as well. So Maxim, we've kind of taken the stage here. Any other questions for us? For Greg and I, if not, we'll call it a day. But
all good there.
All good. I think we're great. So Greg, again, always it's been a pleasure speaking with you. I'm always excited to hear on VCTV where you think this industry is going and where you and Global ID and the team are pushing this industry as well. And if you can, a shout out, any closing thoughts, and then a shout out where everyone can find Global ID because they need to know about it.
Well, just for Global ID, just go to global.id, get a Global ID. It's just claiming a name. You can find me at twitter.com/Greg Kidd. As for the shout out, I think that the one comment I'd make, obviously really excited about NFTs and DeFi. Our observation is for that to go mainstream, you're going to need identity, because who's going to sign all these ledgers? And the tax man and the cops, they're going to show up. They may not be like onto the game right now, but it's mostly just because it's been beneath the radar screen. But 2021, it is not going to be beneath the radar screen anymore. And so to those entrepreneurs out there, keep innovating, but let's make sure this thing doesn't get choked off because it's viewed as a threat, because it just isn't compliant. These things can be radical and transformative. I think they can be compliant as well. It isn't like a battle between the two extremes. You just need to be clever, like that thing that says, hey, it doesn't say that we have to print paper receipt if it's over 15. It just says nobody can ask us to if it's under. We need those types of insights. That doesn't sound like high tech or high ethics, but sometimes that's the grease to get the wheels rolling. That's it.
Wonderful. Thank you so much, Greg, for sharing the thoughts and insights. Everybody, thank you for tuning in today. I hope you enjoyed today's episode. Maxim, thank you so much for the great questions and hosting us today and being a great, outstanding co-host. Looking forward to having you back on many more episodes of VCTV. To our audience, again, thank you for tuning in and learning more about what's happening in the blockchain and fintech space as these worlds begin to take more and more of a stance within our daily lives. I'm your host, Kyle Ellicott. A big thank you to the LATOKEN team and to Maria, along with Maximum, for making today's episode of VCTV possible. Check us out on LATOKEN.com and also on Clubhouse later today at noon Pacific as we break down all that was happening in the week of this week around blockchain and digital currencies. I'll be there hosting a ton of great guests from within the community and a few fun investor friends of the VCTV family. Check us all out on social media. You can find me everywhere at Kyle Ellicott, along with Twitter, LinkedIn, all social media, along with Greg. And we'll be back here with more VCTV next week. But everyone have a great weekend. We'll see you in Clubhouse later today. Take care, everybody.
Take care.
Bye.